Hey everyone, welcome to this week's weekly chat. Invest like a pension fund, invest like private equity. Find out how by watching this video. Hey everyone, welcome to this week's weekly chat. It's Alex Wilson of alexjwilson.com and Toronto Penthouse Living, and we have Kyle DeVigi, Director of Operations of Remax Wealth Builders Real Estate. So today, I want to talk about the hottest real estate asset in the commercial real estate business. Excuse me. And Kyle, what is that?
That is the purpose-built rental market.
Yeah, so apartment buildings.
Yep.
Apartment buildings. So the apartment building market had a record year for sales in 2018, and in 2019, they're looking to potentially even beat that record. And how much do they have in the book so far?
I think it was $4 billion in the first half of 2019.
$4 billion, on track to beat that. In 2018, it was $8.3 billion.
And that was a record.
And that was a record already.
Overall.
Now, when we look at it in 2019, the only reason they wouldn't beat that record, and this is from CBRE, one of the largest commercial real estate brokerages in Canada, why may they not beat the record, Kyle?
There's just not enough product out there.
There is not enough product. The people that do own these apartment buildings, some of them aren't even looking at selling wise because they want to pass it down to generational wealth. So you have this huge surge in demand for these rental properties. We're seeing in the apartment numbers, they're seeing rental growth rates of over 7% on rents year over year. So it's a very attractive asset class and people are jumping all over it. Now, Kyle, the traditional players that were buying these properties were typically your real estate investment trusts. We have it right here. Typically, historically, there was real estate investment trusts and private Canadian investors that were buying apartment buildings. We have seen a shift now away from that, and there are other players getting into this business. So what's the breakdown of people that are buying these buildings now?
Yeah, so private investors account for about 31%, like you said. Pension funds are about 26%, so a large percentage. Private equity is about 16.5%. Foreign investors, kind of surprising, accounted for 13%.
There is no foreign buyer tax on commercial real estate, just if people are wondering about that.
And I was surprised by this one, where real estate investment trusts, you hear about these a lot, but they only count for about 11% of the overall market. And other investors accounted for about 2.5%, the remaining percentages.
So originally it was private investors and REITs that had dominated the apartment buying market. Now, when we look at these numbers, we see pension funds and private equity get into the real estate market. They combined for over 42% of the overall purchasing power or growth-wise in the real estate investment market. So why this change? So what we're seeing, or what everything's telling us, is that these big players, so the pension funds, the private equity people, they like the returns that they're getting on these apartment buildings. Plus, apartment buildings tend to weather out storms when there are recessionary periods or bumps in the economy, because what they provide is long-term stable cash flow. Can you say that as well, Kyle?
Yeah.
Why don't you repeat that?
They bring long-term stable cash flow.
Okay. So
these investments often had been seen as kind of boring, slow-moving. They weren't exciting and didn't have the big returns. But with the increase of the rents that they're experiencing, they are becoming much more attractive to the pension funds and other companies.
So we got 42.5% of the market of purchasing in 2019 and 2018 is pension funds and private equity. When we were in school and co-op jobs, some of the highest paying and top students went to go work in private equity and pension funds, right?
Absolutely.
So high salaries, very, very smart people are working at pension funds and private equity. They are managing billion-dollar plus portfolios, and they're buying apartment buildings. So that tells me that very, very smart people have now turned to real estate investing, specifically residential real estate investing. They find it very attractive. They make more than I do. They make more than Kyle does. So these smart people are doing it. So that says if these people are doing it, if the big money's doing it, then we should do it. So you're like, whoa, Alex, are you saying we should buy apartment buildings? Kyle, are you buying an apartment building?
I'd love to,
Yeah,
but unfortunately, a little out of my range.
I don't have the money to buy an apartment building. Kyle doesn't have the money to buy an apartment building. And I don't think you have the money to buy an apartment building. If you do, give me a call. But I don't think you do. So how do you do this as a investment strategy? How do you follow the big money? Well, what you're able to do is buy condos. Each little condo is like its own little apartment building. You have the ability not to buy an entire structure, but to buy individual units in a structure-wise, a micro economy of apartment buildings. That's what it is. So building your portfolio is like building an apartment building, except you have individual units in different buildings or maybe in the same building, and just one here, one there, two there, that kind of thing. So you are building your own little apartment building with these individual units across. The one advantage that you have over the pension funds in real estate investment trusts, pension fund, well, all the buyers of really these buildings, is the liquidity of these units. So let's say you have 5 condos or 10 condos and you want to cash in on some of your position wise. You have the ability to sell 1 or 2 and still have 4 or 8 units left in your portfolio. So you cash in a little bit, but you're still getting a return on the rest. When you own an entire apartment building, you have to sell the entire apartment building in order to get the return, get the capital back out of that building wise. So you can build your own little portfolio with liquidity wise, with condo units, and do it like the big players are doing it. So if the pension funds are doing it, if the private equity people are doing it, those are the top of the top people looking to make money and looking to returns. Why aren't you doing it? Why aren't you moving money and creating your own apartment building by assembling condo units together and creating an attractive portfolio? Because the reason that these people are doing it, they build long-term, stable cash flow. It's like a dividend-paying stock, except that company might go out of business. The building isn't coming down. You're still going to have a roof over someone's head over 10 years, and someone's still going to need a roof over their head in 10 years. Someone will still need a roof over their head in 20 years. Someone will still need a roof over their head in 30 years. And we look specifically at the Toronto market because we know that there is a shortage, there you go. Try saying that 3 times fast. Shortage of roofs to put over people's heads. And immigration is going to continue growing. Population growth is going to continue growing. Job growth is going to continue growing in Toronto-wise. So invest in long-term, stable returns, roofs over people's heads, because you know that's going to continue going on, and buy condos just like the pension funds are doing, just like the private equity people are doing, and create your own apartment building. Anything you want to add on that, Kyle?
You've said it a million times. Follow the money.
Follow the money. Follow the money. They're making more money than all of us. So from alexjwilson.com, from Toronto Penthouse Living, and Kyle from Remax Wealth Builders Real Estate, if you want to build your own apartment building through condos, reach out to us. We'd be happy to schedule a meeting with you. And building your long-term financial future, retire early, and generational wealth. Okay, talk soon, guys. Bye-bye.